Hey everyone, welcome back to Corporate Decoder, the place where we read between the corporate lines to find the real story. Today we're diving into an official report from Alexandria Real Estate Equities Incorporated. And let's just say there is a bit of a shake-up happening behind the scenes with executive compensation and promotions. Before we get into the juicy details, if you enjoy clear and simple breakdowns of complex financial documents, make sure you are subscribed to the channel. We also have a fantastic Discord community where we discuss these filings in real time, and you can find the link in the description below. Alright, let's get started. Alexandria Real Estate Equities Incorporated, or are incorporated as they're known on the New York Stock Exchange, with the ticker symbol R, is a real estate investment trust. This report, filed on the 9th of January 2026. Mainly talks about changes related to one of their top executives and a new promotion. The first big item is an amendment to the employment agreement for Joel S. Marcus, who is the executive chairman of the company. This amendment is effective the 9th of January 2026. Basically, it changes how a significant part of his compensation is determined. Historically, Mr. Marcus was eligible for annual long-term incentive awards, which are like bonuses paid in the form of company stock. These awards had two parts, one that vested over time and another that vested based on company performance. The total target value for these awards was $3,600,000, with the potential to go up to $4,500,000. Now, Mr. Marcus himself requested a change for the award covering the 2025 fiscal year. Instead of the usual split, 100% of the shares for this award will now be tied to the company's performance. This means he will only get those shares if the company hits certain performance goals. The target value of this award remains $3,600,000, but the maximum he could potentially receive has increased to $5,400,000, which is 150% of that performance-based target. The company sees this as beneficial because it means Mr. Marcus's compensation is now more directly linked to the company's success. He only gets rewarded if the company performs well. This change only applies to the 2025 award and won't affect future awards. It is interesting that the executive himself initiated this change, suggesting a strong alignment with the company's performance metrics. Next up, we have news about a promotion. On the 9th of January 2026, the board of directors elected John Hart Cole as co-president and co-regional market director for Seattle. This change is effective the 1st of January 2026. Mr. Cole has been with the company in various senior roles since 2017. Most recently as Executive Vice President, focusing on capital markets and strategic operations. In his new role, he will be responsible for the strategic growth of the Seattle region, including acquisitions, development projects, and managing key assets. He'll also be involved in broader corporate initiatives like investor relations and capital allocation. The filing mentions that his base salary will increase to reflect this promotion, but the material terms of his employment are similar to what has been disclosed in previous filings, like their proxy statement from April 2025. It seems like a natural progression for someone with his experience, and it signals a continued focus on strengthening their presence in key markets like Seattle. And that is the main substance of this particular report. It is signed off by Marky Binder, the Chief Financial Officer and Treasurer, on the 12th of January 2026. Looking at this filing, the major story is the amendment to Joel S. Marcus's compensation package. By shifting his incentive award entirely to performance-based vesting, the company is emphasizing accountability and aligning his interests even more closely with the business's financial outcomes. This move, initiated by Mr. Marcus himself, is a positive signal for shareholders, suggesting a leadership team that is focused on delivering results. The promotion of John Hart Cole also indicates a clear strategy for growth in important regional markets. While the report doesn't contain detailed financial tables in this specific section, the emphasis on performance-based compensation for a key executive is a strong indicator of the company's forward-looking strategy. It is a move that could lead to greater operational efficiency and stronger financial returns if the company's performance metrics are met. Alright, that is our breakdown of Alexandria Real Estate Equities Incorporated's latest filing. What is your take on the shift in executive compensation and the new promotion? Drop your thoughts in the comments below. If you found this analysis valuable, please hit that like button and subscribe for more deep dives into corporate movements. And don't forget to join our Discord community linked in the description to continue the conversation. Thanks for watching, and we'll see you in the next video.